Welcome back to Rekt Radio, the only show that looks at a market moving sideways and sees our rocket ship fueling up on the launch pad. I'm Sunny, and folks, the quiet moments are when the real fortunes are made.
And I'm Cole, here to remind you that a quiet rocket ship is usually a sign of a critical engine malfunction. This isn't a launch pad, Sunny. It's a museum piece with a fresh coat of paint. Let's get into the news before the rust spreads.
Never, Cole. The engine is stronger than ever, and the biggest names in the world are starting to notice. Did you see the news about TeraWulf, the Bitcoin miner? Their stock absolutely surged. And why? Because Google just upped its stake in them. We're talking about one of the largest, most powerful tech companies on the planet, increasing its exposure to the Bitcoin mining ecosystem. This is a 5-alarm fire of institutional validation.
Let's pour some water on that fire, shall we? Google isn't investing in Bitcoin. They bought a small, passive stake in a publicly traded mining company. It's a tiny, speculative bet in a multi-trillion-dollar portfolio. It's the equivalent of us finding a nickel in the couch cushions. This isn't validation, it's a rounding error. They are getting exposure to a high-risk, high-volatility sector, likely as a tiny hedge. It's a footnote, not a headline.
You see a footnote, I see the first sentence of a new chapter. What could this become? This is how it starts. First, they dip a toe in with the miners, the plumbing of the network. Next, they'll be looking at the asset itself. This is Google, a company that lives and breathes data and technology, acknowledging the power and importance of the Bitcoin network's infrastructure. And it's not just American tech giants. Over in Europe, a Dutch crypto firm just got listed on the Euronext exchange in Amsterdam with a core strategy of holding Bitcoin as a treasury asset. It's the MicroStrategy playbook going global.
What are the risks right now? The risk is that we're celebrating the mainstreaming of degeneracy. These aren't tech companies anymore. They're leveraged holding companies for a volatile asset. When a business decides the best use of its capital is not to innovate or build its products, but to speculate on crypto, it's a massive red flag. We're creating a web of interconnected risk, where a dip in Bitcoin's price could blow a hole in a Dutch company's balance sheet, rattling a major European stock exchange. This isn't adoption. It's a contagion vector in the making.
It's a strategic evolution. These companies are choosing to store their value in a perfect, finite asset instead of a fiat currency that melts like an ice cube. But I know what you'll say. It's just the big corporations winning. But the beauty of this network, the magic of it, is that it's not just their playground. Just this week, a solo miner, one person with a relatively tiny hash rate, solved a block and single-handedly earned the entire 3.125 Bitcoin reward. That's over $370,000.
Oh, wonderful. We're celebrating a lottery winner. Sonny, that's not a sign of a healthy, decentralized network. It's a statistical anomaly. It's like pointing to a guy who got struck by lightning twice and saying everyone should go stand in thunderstorms. The reality is that over 99.9% of all blocks are solved by massive industrial-scale mining pools with warehouses full of ASICs. This one person got incredibly, astronomically lucky. It's a heartwarming story, but it is not a viable strategy or a reflection of how the network actually functions.
But it proves the principle. It's still possible. The protocol doesn't discriminate. That person had the same right to solve that block as a billion-dollar mining farm. It's the spirit of Satoshi still alive and well. It shows that the ultimate source of truth and value in this network is still accessible to the individual. It's permissionless. That solo miner didn't need a PhD or a venture capitalist's blessing. They just needed to plug in a machine and participate in the network. That is the revolution.
Calling a 1 in a million chance accessible is a bit of a stretch. It's a comforting myth. The reality is a brutal, capital-intensive arms race for processing power. And while we're talking about market realities, let's look at the battlefield of the traders. The positioning right now is telling a very interesting and very dangerous story. Traders are building up the largest short positions against Ether ever.
Exactly. They are laying the tracks for the world's most explosive rocket ship. That is the single most bullish indicator you could ask for. A record number of people are betting on the price going down, piling on the leverage. All it takes is one spark, one piece of good news, and that entire mountain of short positions gets liquidated. They'll be forced to buy back in, pushing the price even higher, which triggers more liquidations. It's a cascade. A short squeeze of epic proportions is brewing.
A short squeeze is not a sign of a healthy market, it's a sign of a broken casino. You're cheering for a violent, purely mechanical market move that has nothing to do with fundamentals or adoption. And it cuts both ways. That massive pile of shorts could also be interpreted as smart money seeing a major vulnerability or a coming price collapse. You see it as rocket fuel, I see it as a giant powder keg with people gambling on which way the explosion will go. This isn't investing, it's a bet on liquidating other gamblers. It's a circular firing squad.
It's the market's immune system clearing out excessive pessimism. Let's settle this the way we always do. Forget the narratives, forget the stories. Let's look at the cold, hard data. Let's pull up the technicals for Bitcoin on the one-day chart from TradingView and see what the oracle is telling us.
All right, let's consult the tea leaves. I have it here. The overall summary of all indicators is sell. Not neutral, not buy, a clear sell. The oracle seems to be in a rather foul mood, Sonny.
Okay. A sell summary is just a snapshot of the current sentiment. It's the market's immediate emotional reaction, but you have to dissect it. Let's look at the oscillators, which measure that short-term momentum. What are they saying?
They're screaming. They are flashing a strong sell. So the immediate real-time momentum is pointing aggressively downward. The sellers are in absolute control right now. The car is not just stalling, Sonny, it's rolling backwards down the hill.
But that's my point. It's the short-term, twitchy, panicked money. That's the noise. You have to look at the powerful underlying trend. Look at the moving averages. They smooth out all this daily noise and show you the real long-term conviction in the market. What is that deep current telling us?
The moving averages are on neutral.
Haha, see? This is the classic divergence. The short-term panicked and selling money are panicking and selling, creating that strong sell momentum. But the long-term foundational strength of the market is holding firm at neutral. It is refusing to break down. This is the market absorbing a wave of fear, finding its footing, and preparing to prove the short-term sellers wrong. The strong hands are holding the line.
Sonny, that is the most optimistic spin I have ever heard. You're celebrating the fact that the long-term trend has degraded all the way from buy down to a state of complete indecision, while the short-term trend is actively in a nosedive. The engine has failed, and now you're telling me the wings are starting to wobble and you think that's a good thing? This isn't a sign of strength. It's a picture of a market in profound distress, where the last pillar of support is about to crumble.
That's all for this episode of Rekt Radio. I see a world where the biggest companies are getting involved, where the individual is still empowered, and where the market is shaking out the fear before its next monumental leg up. Stay bullish.
And I see a market where corporate speculation is creating new risks, where heartwarming stories are just statistical noise, and where the technicals are screaming a warning. Be careful out there. Don't try to catch a falling knife. You've been listening to Rekt Radio.